Welcome to a video on illustrating perpetual inventory system with the last in first out cost flow assumption. Same set of facts. So read over the facts if to remind yourself. We went through them in the previous video in the perpetual inventory system first in first out FIFO video. So if you need to reread these, I summarize them here. Here's the transactions for the month in tabular form. The beginning inventory was 400. We had a purchase of 200, a sale of 250, a purchase of 400, and a sale of 200 during the month. And now we're going to account for those using the perpetual system with the last in first out cost flow assumption. All right. And so the first transaction was that additional purchase on January 8th, and it is 200 balls at 28. Or 5,600, and you should have that posted to your general ledger account. We have no sales yet, so cost of goods sold has nothing in it. All right, I'm going to go a little faster, so just pause the video if you didn't have this. Hopefully, from working the problem already, you have this. But if you don't, and I go too fast as I go through these, just pause the video so you get it in your notes correctly. All right. A couple days later, we sell 250 balls for $50 a ball. Remember, it doesn't matter the cost flow assumption for the sale. Sale is at the price it was made at. But we do need it to record the cost of those balls sold and the transfer from inventory. And here it is last in, first out. So we assume it is the 200 that we bought just a few days ago at 28. Those plus $50 balls from beginning inventory that we bought at 25. Because this is last in, first out. And this is the point of time we are at under the perpetual inventory system. That's all we've purchased to this point. That's all we had to sell. We had a total of 600 balls that we acquired at those prices, and we assume that those 200 got sold and 50 of those got sold when we sold 250 under the last in, first out cost flow assumption. And so this is what our ledger account looks like at this point. If you look back, the inventory, the cost of goods sold under FIFO was $6,250 because we used the first in, first out cost flow assumption. So we were assuming the balls we purchased at 25 were sold, not a bunch of them that we purchased at 28. January 19th. We make that purchase. Which was again 400 at 30. So it was that purchase. And at this point, our general ledger's accounts, after we posted that purchase, they look like this. Cost of goods sold hasn't changed because we haven't made a sale since that one we made on the 10th. And there is the purchase. We now have 750 balls available for sale, up from 350 after we sold 250 of those. And then there is our January 25 sold, again under last in, first out. Now, there was 250 sold. I'm sorry, there was 200 sold. And it was at this point in time, so under last in, first out, we assume they are that those most recent purchases. Oops, 200 balls times 30 per ball. We assume they're from that January 19th purchase. And so now our ledger looks like this, and our financial statements are shown below. So our ending balance in inventory is 14,750, and the cost of goods sold, if you add up the 6,850 and the 6,000, that's 12,850. And so on the financial statements, there's cost of goods sold, and there's ending inventory. Notice gross profit is quite a bit lower under LIFO than it was under FIFO. Because the cost of goods sold is much higher under LIFO because we're in a time of increasing inventory prices. So simply because of this cost flow assumption we made, net income for the company changed by a fair amount. And that's what's relevant about this topic. Notice the cost of goods sold was still $27,600. Cost of goods available for sale, I'm sorry. But the cost of goods sold was $12,850, and in ending inventory was $14,750. And if you add those up, that's $27,600. So that's the cost of goods, cost of basketballs available for sale. That's the cost of the ones we sold. And that's the cost of the ones that remain in ending inventory. All right. And that's perpetual LIFO. In the next video, we'll do perpetual inventory system with average cost. In preparation for the next video, I hope you'll go ahead and work this case using a perpetual inventory system with average cost. And I'll see you in the video. Thanks for your hard work.